Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I Tell.
All right, my name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show. And guys, I know you've been waiting for this all week. We're here. It's time. You are in the right place if you want the inside information, the tips, the tricks, the strategies. I mean the real data, not the headlines. The info that you need to make better real estate and mortgage decisions for you and your family. Well, you have come to the right place. Dom, my producer, and I do this each week right here. Same bat time, same bat station, and we are very excited that you're with us. So thank you for joining us. And the biggest part, my favorite part of the show, are your questions. So let's throw out the Anytime Hotline, 855-462-7292. That's 855-462-7292. You can call or text that number. And Dom is manning the Anytime Hotline, and he'll get your questions on the air. If you prefer to do it via email, just go to mr.mortgage, never a .com. Just type in mr.mortgage, hit enter. The page will pop up, and on the upper right-hand corner is a Contact Us box where you can fill your question in. And Dom will pull it down from cyberspace, from the email gods, and get it on the air for you. But yeah, you are in for a good show this week. We've got a lot of data swirling around about real estate and mortgages, and I'm waiting for Chicken Little to come flying in the studio, and that's all we need is one more. The sky is falling. Rates are up. The market is slowing. Stock market's down. That reminds me of that old Hank Williams Jr. song. What is it? The interest rates are up and the stock market's down. You only get mugged if you go downtown. That's my best. Dom's leaving. He can't take it anymore. That song, guys, was released in 1981. And the reason I'm mentioning that is each week we're getting more and more data suggesting that we're seeing inflation numbers that we haven't seen since the early 80s. And last week I sang a medley of 1982 hits, so I went a year back and pulled Hank Williams Jr. out of the archives. But yeah, in that song he talks about the stock market being down and interest rates are up, and that's the week that we just left. I mean, it's been a roller coaster. And guys, listen, if you're looking to Washington to solve your problems, you're looking in the wrong place. You got to look in the mirror. And I promise I'm not going to sing Man in the Mirror by Michael Jackson. But that's where I'm going with this, because it was not too long ago that both Janet Yellen and Jerome Powell, as well as President Biden, and I think Biden's exact quote was, "No serious economist believes that inflation is going to be a problem." And both Yellen and Jerome Powell said, "Don't worry, it's transitory." And then they said, "Don't worry, we're going to easily get it under control for a quote-unquote soft landing." And then as recently as 2 weeks ago, President Biden in an interview said he doesn't even think we're going to see a recession. Well, guys, this isn't a political statement because I don't do politics. We've got to survive day to day down here in the real world, regardless of who our elected leaders are. But it's frightening to me that I think the mindset is let's ignore a problem, hoping that it'll go away. But now, this week, the indicators all hit 100% probability of inflation, or at least the ones that I read in the CNBC data sets this week. So I think everybody finally realizes that this isn't going away easily, and there is likely to be more increases in interest rates, albeit the overnight rate, which is tied directly to credit card debt, home equity lines, adjustable business lines of credit. It's less of an impact on mortgage rates, but you notice everything's moving in the same direction. Mortgage rates are being controlled by outside influences. International buyers of mortgage-backed securities are not, showing up with the appetite they've had in the past. And the most significant piece of the Federal Reserve's tightening is that they're no longer buying the volume, and I don't think they're buying any at the moment, but certainly not the volume of mortgage-backed securities that they bought during the pandemic, and that's what drove interest rates down. And you hear me talk about it all the time. Supply and demand controls prices. Well, right now there's not a lot of demand for mortgage-backed securities, and that's what's causing the interest rates to go up, because as prices go down, rates go up in the bond, in the mortgage-backed security world. But I'm not going to dive too deep in that unless you want to talk about it, because I can go on and on and on, and I love to talk about it, because those are the economic factors that we need to focus on. Not, is there going to be a new grant program, or is somebody going to forgive this debt or that debt, or are we going to get first-time buyer, bonuses? None of that is going to impact you in time. We've got to deal with the day-to-day, and right now the day-to-day is still, a rapid inflation cycle, and real estate is still appreciating even at these interest rates. So it's an interesting time, albeit feeling similar to 1981. And I guess, history does have a tendency of repeating itself, because a lot of the climate is very similar to the early 80s. So maybe this was a precursor and we could have seen it coming. I don't know, but it's definitely here. And, our goal is to give you the information that you need to navigate through it. We can talk about strategies on how to buy interest rates down, using creative loan programs to buy properties. It's still a great time to be a landlord, right? Rents are still going up. So real estate historically does well during a recession, and I don't think it's going to be any different this time. As a matter of fact, you've heard me say it in the past, I think the rising interest rate environment, is going to have a negative impact on both supply and demand. And what I mean by that is, I don't think a 7% interest rate in and of itself is a problem. It's historically a very fair cost of money. Where we run into the challenge with that is how quickly we've gotten here. So the vast majority of mortgaged properties in the country today have a ridiculously low, artificially low by historical standards, interest rate. So if you're sitting at home right now enjoying the subtle tones of my voice while you're sipping on a cup of coffee in your plaid bathrobe with a coffee stain down your wife beater t-shirt and your feet are up on the ottoman, and you've got a super low interest rate and a ton of equity in your property, you're highly unlikely to be motivated to sell that property, because you're going to have to go out and buy another one in an appreciated price cycle, but also a much higher cost of money. So a lot of people are just going to sit out for the short term and not put their properties on the market, which is going to continue to limit supply. And even at these interest rates, there's still more supply than demand. And I mean, more demand than supply. And I say that because that's what's buoying prices. More demand than supply, prices go up. And we're not balanced yet. There's still more people who want to buy. And here's an interesting statistic. I think this was the fifth or sixth, and I'll post this article to the Facebook page. And if you're not part of that group, check out the Mr. Mortgage Show on Facebook. We post a ton of great data there each week, and everything that we reference after the show goes up there. But I believe this was the sixth straight month that new listing inventory, that's people who just put their house on the market, that number is down, and it's been down for the last 6 months. So there's less new product being put on the shelf. And the product that's already on the shelf, yes, it's taking a little longer to sell. And you've read the headlines. There's I think 70 or 75% of the properties experienced a price reduction. And that's just a product of people listing their price at, yesterday's aspirational number to begin with. And as that settles through the market, we're going to see less and less of the need to reduce prices, because people are going to put the right price on the property to begin with. But my point in all of that is, right now, there's still more demand than supply, and the new listing number is down. The home builder sentiment numbers that were released recently are all down, and the home builders are announcing that in 2023, there are going to be fewer housing starts than in 2022. Again, another pressure point on inventory, all of which seems to support, at least in the near term, the real estate values that we've reached. So I share all of that only to encourage you to, stay the course, remain positive. Interest rates do not control supply directly. They only are designed to quell demand, and they need to cool demand a lot more than they have already to balance out the market. So if you're a seller, it's still a good time. If you're a buyer, I think it's a good time, because in my opinion, I think rates go up from here. And we'll talk a lot about that this week. We've got some great data points that we're going to share. We're going to get to your questions. I know Dom's already given me the signal that a couple have popped in, so I'm excited. We've got an awesome show lined up for you, but you hear the music. You know what that means. That's my cue. We'll be back in two. Sit tight for 2 minutes on the other side of this break. We'll be back with the Mr. Mortgage Show.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you heard the man. You can call or text 855-462-7292. That is the Anytime Hotline, and Dom will get your question on the air, 855-462-7292. And hey, Dom just reminded me during the break that we still have some of those Women of Walmart calendars for 2023 to give away. Yeah, I don't know if you remember this. There's some pretty ladies in there too, boys. Unlike the mechanic calendars, right, that you see when you take your car into service. These are a whole different class of ladies, but nonetheless, we're happy to give the calendars away. But I don't know. I guess it's been a month or so ago that we said the listener from the furthest away location, and we included the app in that, was going to win the calendar. Well, I sent a calendar to Max and Stuart, who was listening to us in Ecuador on the app. So that was pretty cool. But anyway, maybe we'll give away some more of those. If you have a favorite hit song from 1981, go ahead and text that over to Dom and let me know. Maybe we'll sing it together on the air. You guys heard me butcher the Hank Williams Jr. song during the open. And if you missed that, go to MrMortgageRadio.com for more fun and excitement. But yeah, we were referencing the early 80s and the inflation cycle that we're in, and it got me singing Country Boy Can Survive, I guess, which is a good motto, right? Because we did survive 1981 and we're going to survive today. And guys, it's not as bad as you know, everybody's making it out to be, right? I mean, yeah, rents are going up, housing prices are going up, but inflation's going up. I get all of that. It's much more uncomfortable to live right now at this moment. And there's a lot of geopolitical uncertainty in the world. However, wages for the most part are increasing, albeit at a very slow pace, and the job numbers are down. So there's opportunities out there for all of us to survive and even thrive. And I say that because we've got a lot of clients that are still winning in real estate. You know, they're taking advantage of some of the strategies that we talk about. And believe it or not, there's still some deals out there. I mean, I talked to a gentleman yesterday who closed a transaction with us a little more than a month ago, and if memory serves me correctly, he paid $480 for the property. It appraised for $530, so he moved in with $50,000 worth of equity, and he put a big down payment down on the property to get a really good mortgage program. And I just turned him on to a friend of mine who manages a bank branch because they've got an amazing HELOC program, home equity line of credit, and now he's taking a home equity line of credit to access that big down payment and that $50,000 of instant equity that he moved in with, and he's going to use that money to renovate the property. So there's still opportunity out there, guys. It's not nearly as scary as the headlines indicate. But anyway, we're here to answer your questions, and we're here to diffuse the bombs of the headlines because they're scary. I mean, they're crazy. But oftentimes when you read the data, they're not that bad. So, hey, speaking of questions, I know Dom said we had a couple of them come in when we were talking during the break. So let me throw it over to Dom for a question.
Amanda sent this one. We're in the middle of the mortgage process with our bank. They're now telling us since we don't show the income from our rental property on our taxes, we can't use the rent to offset that mortgage payment. Does this sound right? Do we have any options?
Okay, Amanda, that is an interesting question. So I'm very, very glad that you brought this up because it gives us an opportunity to walk everybody. I'm going to answer your question, but I'm going to use it to illustrate where we see a lot of people go wrong. And when I say go wrong, what I mean by that is you're now trying to finance another property and you've created a bit of an issue for yourself because you're not claiming that rental income. And I get it. A lot of people will not claim that rental income because they don't associate it as a profit, right? They're not making any money. It's either a net push. You know, I get a $1,500 a month mortgage payment. I collect $1,500 a month in rent. There's no income there. Well, actually, all of that $1,500 a month is income, and all of that mortgage payment is an expense. So there are no income taxes due. And guys, I'm not a tax attorney, so maybe I shouldn't say that. I'm happy to refer you to one. And I've got an amazing CPA, Pete, who's right down the hall from my office, who maybe I'll bring in one of these weeks because the dude is brilliant. But my point is there are there's an income column and an expense column against that property. And there may be no profit, so there may be no taxes due, but you are making income. And there's an old adage in the mortgage world that if you're not telling the IRS, if you're not showing it to the IRS, you can't show it to the bank. And what that is saying is exactly this, right? So to Amanda's question, guys, if you're out there and you're thinking about holding the property that you have and you're going to rent it out and you're going to go buy a new property, that's awesome. You can do that. But if you've rented that property for a long enough period of time that it should have been reported on your taxes, right? So if you just did it right now this year, you had no opportunity to claim that income, and then you would be okay. And Amanda, if you haven't held that rental property as a rental property in the tax year of 2021, there may be a workaround for you. But what I'm saying is if you don't show it on your tax returns, oftentimes the lender can't use it. Now, to Amanda's point, she's got a mortgage on her credit report from that first property, right? And I'm guessing it was probably your primary residence at one time. And when you rent that out, that credit report still shows that mortgage amount, right? So that's why the bank is looking for an income source to offset that expense. Now, when they qualify you for the new mortgage, you now need enough income to income or debt to income ratio both of those mortgage payments. And that's where the challenge is, because even though the tenant's income, the rental income rather from the tenant is offsetting that rental or that mortgage cost, you're not showing a way to validate that. And with a conventional mortgage or an FHA mortgage, that's done via tax returns. Now, to your question, yes, it does sound right, and hopefully that explanation made sense to you. Now, to the second part of that question, do you have options? You do have options. So one option is to amend your tax returns. And if there are additional taxes required because of that amendment, they need to be paid and received by the IRS. and then you can move forward with your underwriting process on your current loan. The income is now there. It's validated. It's verified. If there was additional taxes, they've been paid, because that's another part of the underwriting scenario. And then you can keep moving. If you don't have time or you're unable to do that, the second strategy would be just to wait, properly file your tax returns this year. And then, because we're getting close to the end of the year again, right? So you could be 4 or 5 months, you're mortgage ready again, because you could file your tax returns on January 1, and off you go. Now you showed the income from the rental. That's option 2. So option 1, amend your tax returns. Option 2, wait until next year when you filed this year's returns correctly. And then option 3 is the bank statement loan, because with the bank statement loan, we're not looking at tax returns, W-2s, pay stubs for income verification. We're using the money that's deposited each month into your bank statements as the verification of income. If that will work for you, sometimes there's a larger down payment required on a bank statement loan than, say, an FHA loan. But all things considered, if the math works out for you, that's a loan program. That's an option that you would be able to execute right now. So, brilliant question. I appreciate it. I hope that helps. If anybody needs more information around that, that's what we're here for. You can call or text 855-462-7292. That is a great question. Hey, Dom, do we have time for another one? Nope. Dom's waving me off because we're getting close to the break. But, that it's interesting, because that's a scenario we see a lot of, right? We see people who, and it's innocent. They're treating it, as I mentioned in that opening answer to the question, because it's not additional money over and above the expense. They don't think it's income. It's not profit, but in the eyes of the IRS, it is income. And from the lender's standpoint, the only way to verify that income and meet guidelines is the tax returns. And that's where the bank statement loan program provides tremendous flexibility for people who creatively file their tax returns. We all know self-employed people don't show all of their income, or they get very liberal with their write-offs. I mentioned Pete down the hall in my office. We joke sometimes when we're at the coffee bar together that I've never heard anybody walk into his office and say, "Pete, make me mortgage ready." No, they walk into his office and say, "Pete, I want to pay the smallest amount of taxes possible. Roll your sleeves up and start butchering my income with write-offs." And then we end up with challenges like this. But guys, that's what the bank statement loan program's for. All of that being said, I hear the music and Dom is waving me down over there. It is time for a break. That's my cue. We'll be back in 2. Sit tight for 2 minutes and stay tuned for more of the show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Dom and I do this each week right here, same time, same station, with the goal to give you the information that you need to make better real estate and mortgage decisions for you and your family. And we take all of your questions, even the off-color ones. Some of them don't make the air, but we do take all your questions. And you can get your questions to us by calling 855-462-7292 or send a text to that number. Call or text 855-462-7292. You can find us online at mr.mortgage, never a .com, just mr.mortgage, and you can send your questions through the website also. That was a great question Amanda had. We talked a little bit in that last segment about alternative income verification around the idea that the tax returns did not include the rental income from the prior year. So hopefully that was helpful. And if you want to hear that again, or you want to hear me sing hits from the 80s, then just, visit Mr. Mortgage Radio after we get off the air. Dom posts the recorded version of the show up to the podcast page. And there's a lot of other good stuff there too. Check out MrMortgageRadio.com. But we are going to keep your questions rolling. And we did get a couple song submissions, so I'm going to let that roll through the show, and maybe I'll read you some of these because I didn't realize these were all from 81. There's some interesting ones, but somebody is Googling and having fun sending us these. But anyway, Dom, what else do we have?
Tina sent the text. We really need to do a refinance. We've got credit cards and car payments that we want to pay off. We've waited thinking rates would come back down a little. Do you think rates will come down soon?
Hey, Tina, that's a great question. You, me, and everybody else is wondering that same thing. Actually, I don't want to burst your bubble, but, we talk about songs all the time. So what is that song? Waiting is the hardest part. And in this case, it's the most painful part, too, because you see what happened to interest rates in the last 6 months. And, this isn't you should have done it, because I hate when people say that, told you so. But the reality is rates, there's no indicators that they're going to come back down anytime soon. And by soon, I mean, 12 months. What happens after that, I have no idea. It depends so much on what's going on with the economy. The Fed is going to keep raising the overnight rate until inflation levels or comes down, and it's just not doing it. I mean, inflation has just slapped every economist in the face saying, hold my beer, watch me go. So firsthand what waiting has done for you to this point, right? Your credit card interest has gone up. If you have a home equity line of credit, that's gone up. You might have big car payments because you bought at the wrong time during the pandemic. So if you're waiting for rates to come back down before you bail yourself out, I don't know that is going to work in your favor. Now, you could do a rec refinance and pay all that off and then not look back. You could do a home equity line of credit and pay that stuff off and then hope for a rate reduction and maybe roll those two into one loan at a later date. You could do a rec refi now, pay it all off, and then do a rate and term refi in 18 months, 24 months when rates become favorable again. There's a lot of strategies on how to make sense of moving forward with a debt consolidation strategy. There's not a lot of outlook that's positive on the waiting front. So I hate to hear that. I'm sorry that you waited through this. I know a lot of people guys, nobody saw this coming. I mean, we spoke about the administration and the powers that be didn't even see this coming. So nobody knew we were going to go this far, this fast, but now we're here. This is the reality that we have to work with. So, 7% interest on a home loan is still a heck of a lot cheaper than, 24, 26% on a credit card, or some of these car loans that I've been seeing now popping up around 16%. So if you want to take a serious dive through all of that, and we can look at your total monthly outflow and look at all the debt and try to come up with a strategy, I mean, I'm happy to do that for you. You can give us a call at 855-462-7292, and we'll just walk through it together. But, I don't know what your personal situation is, how close you are to really feeling pain, if you will. So I'm not sure waiting makes sense, but hopefully that helps. Let me throw it back over to Dom for another question.
Kenny sent this one. I've been listening to your show for a while. I remember one time you were talking about selling a classic car for a down payment. I have a 1958 Les Paul Sunburst I'm selling for a down payment, and I want to do it right. Please explain the steps again. Thanks.
Hey, Kenny, you are doing it right, my man. If you've got an old Sunburst Les Paul, congratulations. I hope you played it once in a while. Dom, do you know what a 1958 Les Paul Sunburst is?
No.
Les Paul is one of the more coveted guitars.
Is that?
Yeah.
I know the name, yeah.
Awesome guitar. The guys in my band all play Les Pauls, and, it not only is it just sounds better, it's just a big crunchy thing, and the 50s original issue Les Pauls are like coveted as the best ones, and the Starburst was this cool design. So I'm guessing, I don't know the condition, I just happen to be a music head. I'm guessing that's probably a $20,000 or $25,000 guitar. So super cool, my man. But to answer your question, document. So if you're selling the guitar on a site like Reverb, right? They have used music equipment. You want to clip that listing, and then when you make the transaction, you want to document it. So you're going to want to issue a receipt for the full amount of the guitar. And this is where we talked about the cars, and I remember that episode. People oftentimes will sell a car for $20,000, but on the title they'll write $5,000 because the buyer doesn't want to pay taxes. Well, guess what? If that's your only documentation, there's no way for you to show that you sold that car for $15,000. It's a little less of a concern in the world of a Les Paul because it's not going down to the DMV to be registered and pay taxes on it. But you're going to want to document it. So show the listing, show the receipt, and then make the deposit for the exact amount that the receipt shows. So don't make a receipt for, $25,500 and then put, $700 in your pocket and go in there and make the balance as the form of a deposit, because the math doesn't line up. So it's really document is the strategy, whether it's a car or a Les Paul, because when they see that big deposit in your account, and anything outside of the ordinary is considered a big deposit. I mean, we've had big deposits classed as $1,500 if it's not something that happens regularly in your account. So a $20,000, $25,000 Les Paul guitar being sold is definitely going to require a letter of explanation. The good news is it's all above board, certainly doable. We see it all the time. You'll hear people use the term sourced and seasoned when they're talking about a down payment. The money needs to be sourced. That's what we're doing by document. And then seasoned is oftentimes it needs to be in your account for 2 months, right? In this instance, if you've owned the guitar for a long period of time, it's already seasoned. It's an asset that you have and that you liquidated. So anyway, I hope that helps. I'd love to talk to you more about it though, man. Congrats on having a beautiful guitar in your collection, and good luck with that. Hey, Dom, do we have another question?
We do. Terry sent this one. My husband is being transferred, so we're moving. We want to keep our house and rent it because we want to move back eventually. We have an FHA loan on this house. Can we buy a new place with another FHA loan? When I look online, it's pretty confusing. Thanks for your help.
Hey, Terry, that is a great question, and there is one thing that I need to know, and you're going to know this, is how far are you being transferred, right? So the FHA loan has what's called a departing residence rule, which means that's the house that you're leaving. You can keep it and rent it out if you are being transferred to an area that's considered too far away to commute to. And by FHA standards, it's 100 miles. So if the new place is going to be at least 100 miles away from the old place, then you meet the requirements to buy the second property with an FHA loan. And a lot of people do that because the FHA loan not only has a better interest rate, oftentimes, especially now in the environment that we're in, it may even have a lower mortgage insurance premium, but it certainly has a lower down payment requirement than a lot of the other loans. So if you're looking at a conventional loan with a 3% down, or an FHA loan, which requires a 3.5% down payment, oftentimes the monthly payment is significantly less on the FHA loan. And that's why people like the back-to-back FHA strategy. And guys, I know in the past it was thought to be just for first-time home buyers, but FHA loans can be used multiple times in a row without an issue. So hopefully that helps. That was a great question, but you hear the music, you know what that means. That's my cue. We'll be back in 2. Sit tight. On the other side of this break, we'll be back.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show, and we sure do appreciate you. Thank you for spending a bit of your day with us. Dom and I do this each week right here, same bat time, same bat channel, so we're excited to have you. But you heard the man, 855-462-7292. That is the Anytime hotline. You can call or text that number anytime. If you're feeling lonely in the middle of the night and you want somebody to text to, if Dom's up, he'll reply. 855-462-7292 is the Anytime hotline. Call or text that number. Or find us online at Mr. and you can submit your question via the Contact Us box. That's Mr. never a .com. But guys, if you're just joining us, we take your questions each week, and we've had some really, really good ones so far. We just talked to Kenny, who was asking us about selling his 58 Les Paul Sunburst. Man, I want to see it before. Hey, if you're still listening, text a picture of that to Dom. I'd love to see it before you sell it, man. That's an awesome guitar. And then Tina was asking about a rec refinance, and Terry was talking about an FHA loan in the new city that her husband was being transferred to. So if you missed any of that and you want to double back, just check out MrMortgageRadio.com. Dom will post the replay of the show once we get out of the studio today, clean up our mess, and get on with our days. He'll have that up for you as a podcast episode at MrMortgageRadio.com. But guys, we got some questions stacked up because I was a little long-winded, and I'm not going to apologize because we had some good content there. But let me throw it over to Dom and see if we can't work through some of these questions.
Janet is asking, my insurance just jumped again. I called my agent to cancel, and he said my mortgage company will just force place me. What does this mean? We may have to sell and downsize if something doesn't change.
Hey, Janet, I am so very sorry to hear that. There are a lot of people that are faced with this exact same circumstance. I had a very disheartening conversation with a couple whose insurance over the last 3 years has gone up $6,000 a year. And guys, that's $500 a month. And I don't know about you, but an unexpected $500 a month from now until eternity can make an impact. And it's really affecting the senior community who's on a fixed income, or actually even somebody, let's face it, it's affecting everybody. So insurance is definitely the wild card right now. The rates, as you know, these insurance companies are trying to offset their costs, whether it's fires in California, whether it's hurricanes in Florida or floods, in the Mississippi Valley region. These guys are just grasping at straws to recoup the cash outlay for these disasters, and the only chance they have is to rate hike everybody, and they're doing it, and they're relentless about it. So I'm sorry to hear that you're in this spot. So forced place means if you don't have insurance on your property because of cancellation or unpaid premium, your insurance or your mortgage company rather is just going to pay for a policy on your behalf, and then you're going to owe the mortgage company that premium, and they'll roll it into your payment, or you can pay it outright, but you're not getting out from underneath the burden of that expense. And oftentimes with a forced placed insurance policy, it's far from the most competitive quote. And, oftentimes it's the insurance company that the mortgage company owns. So, they're giving you, whatever they choose on your behalf. And oftentimes it's a big premium. So that's what forced placed means. Your mortgage company and the documentation that you signed when you took out your mortgage requires that the property be insured for the replacement cost or the loan balance, whichever is less. So you could reduce your coverage. Now, I'm not advocating people to reduce their coverage to a level that they're exposing themselves to unnecessary risk. But if you're in a situation where you're talking about buying groceries or paying insurance, then you've got to do something, right? And one strategy is to reduce your coverage to the lower of those two numbers, either the replacement cost or the mortgage amount. That may help. If you took a mortgage out, 20 years ago and you had a balance of $300,000 and now your balance is down to, $28,000, you can reduce your, it wouldn't be that far. But anyway, my point is you can reduce it to what the payoff currently is, or the replacement cost of the property. And that's what's getting a lot of people caught off guard is the replacement cost because of inflation, because of wage growth, because of the supply chain issues, and because of construction costs. The replacement costs on properties is now considerably more than it was as little as 2 or 3 years ago. So when you talk about replacement cost or loan balance, whichever is less, oftentimes that replacement cost was less in the beginning, and now it's increased so much over the last few years because of all of those instances that I just mentioned. So forced place means the insurance company is going to do it for you. The mortgage company, rather, is going to do it for you, and you have no choice in the matter. One thing to consider, and I don't know if you fall into the age group that would be qualified for this, but a reverse mortgage may help. In a reverse mortgage, you just don't make that monthly mortgage payment anymore. You do have to pay your taxes and you do have to pay your insurance, so it wouldn't help there. But it might free up some of that monthly expenditure so that you had additional funds for just day-to-day life. So hopefully that helps. I'd love to talk more about that with you. And I've got some rock star insurance brokers we've been working with who have been getting some surprisingly competitive rates. So at very least, get your rate requoted with your guy, or I'll be happy to refer you to somebody that may be able to make a difference for you. But great question. Let me throw it over to Dom to keep the questions rolling.
Jake is asking, I filed Chapter 7 bankruptcy 4 years ago. How long is the waiting period before I could get another mortgage?
Hey, Jake, that is a good question, brother. I'm not going to do the State Farm joke. I'm sure you're already tired of it, but all right, what are you wearing? I had to do it. But anyway, so you can get a mortgage in as little as 1 year after a Chapter 13 with 12 consecutive payments made on time. But with 4 years, you're fine. The rule of thumb is between 2 and 4, depending on the loan programs. So, and it's from the discharge date, not the file date. So if your bankruptcy took a long time to go through the courts and you filed on January of 20, but it didn't get discharged until July of 20, then July of 2022 is your 2-year window. So it's always from the discharge date, or in the case of a Chapter 13, they're looking back at the most recent 12 months of maintenance payments to make sure that was on time. But great question. 4 years out, you should be in good shape, assuming that you've rebuilt the other necessary credit items to qualify you. That's the one caveat. Credit score meets the requirements, the number of positive trade lines meets the requirements, and they're not high bars to meet, but that is a caveat, assuming that you've rebuilt your credit to an underwriting standard, 4 years is more than enough time. Let me throw it over to Dom and let's get one more in.
Here's an email from Renee. I own an 8-unit building. It's fully occupied and has great cash flow. I'm ready to buy another building. From a mortgage standpoint, is it easier to do a cash out refi on the building to pay for another, or start from scratch with a purchase mortgage for the new one?
Hey, that's a great question. So one is not necessarily easier than the other, but a brilliant question to even be considering it. Assuming that you've got, documentable assets and the new building is throwing off positive cash, then a purchase, a purchase transaction always gets a slightly better interest rate than a cash out refi transaction. And that's just rule of thumb. A purchase transaction carries slightly better rate. So that being said, that would be something to consider. But oftentimes with investment properties, there's an acronym called BRRRR, and there's a lot of R's. It's B and 4 R's, BRRRRR. And what it means is buy, rehab, rent, refinance, and repeat. And a lot of people are super successful investors using that strategy. And the logic is that you only come out of pocket with your personal money for that first purchase. You get the property rehabbed, you get it rented at market value, it's throwing off nice cash flow. You refinance it and pull out enough equity to use the house's money, if you will, to buy the next property. So you're maximizing your leverage. And then I'm sure you know all the tax benefits of that strategy and the depreciation benefits. But anyway, to answer your question, one over the other is not necessarily easier. The purchase might carry a slightly better interest rate. But if you want to talk through that BRRRR strategy, buy, rehab, rent, refinance, and repeat. That's BRRRR. A lot of people are hitting it out of the park with that strategy because they're only coming out of pocket the first time, and then they're playing with the house's money. Not to use a Vegas quote, but hey, Dom's going to Vegas right after the show, but we'll get you to fill us in next week on that. All right, you hear the music. That's my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, we're going to hear about Dom's Vegas excursions.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you heard the man, 855-462-7292 is the Anytime hotline. You can call or text that number, 855-462-7292. Hey, we've had some great questions so far. We just finished up that last segment talking about the BRRRR investment strategy: buy, rehab, rent, refinance, and repeat, right? BRRRRRR. Sound like a seal at the zoo there. Buy, rehab, rent, refinance, and repeat is the Brrrr strategy as an investment game plan to go out there and buy as many rental properties as you can. But great question on that. If you missed it and you want to double back, just check out Mr. Mortgage Radio. We'll have the podcast up there later today. And speaking of later today, my man Dom, right? This kid is a rock star. You think his favorite part about being one of iHeart's most coveted producers is doing the Mr. Mortgage Show, right? That should be enough for him. But no, that's not enough for him. This guy flies to all the most awesome music festivals in the country. And when we leave the studio, he's up in the air and off to Vegas. Dom, where are you going?
I'm going to When We Were Young Music Festival.
Nice. When We Were Young. Now, what is that?
It's like a punk band, a bunch of punk bands from like 2010 era.
All right. Well, a lot of us were young back in the 80s. Dom was young in the early 2000s. So we will expect a full report, my man, next week. Have fun.
Oh, yeah. It'll be a fun night.
Yeah. So Dom is, not only is he an amazing producer, the guy is absolutely a rock star, jet setter. He's gone from producing some of the most popular iHeart shows to, on location at these music events and then hanging out with us each week right here doing the Mr. Mortgage Show. I used to think he was the lucky one. Maybe I'm the lucky one. But guys, listen, we've had some brilliant questions this week. I hope you've gotten all your questions answered. We talked a lot about, how to handle this market, some strategies around buying the rate down, the risks of waiting, right? We dove into that a little bit earlier in the show. What happens if prices keep going up and interest rates keep going up? You're only boxing yourself into more of a corner. Getting into the game now, you're going to be building equity, yes, at a slower pace. Yes, you're paying a higher interest rate, but that interest rate is fluid. If the economy sets up an opportunity for rates to drop, you can always refi. So right now, supply and demand still indicates prices are being supported. Supply is still under a severe pressure. We've talked about it, at the opening of the show and throughout the show. Check out Mr. Mortgage Radio if you want more of that and you want the data, or go to the Facebook page, which is the Mr. Mortgage Show. I'm going to post all of this up there. But hey, we talked about the Women of Walmart calendar giveaway. So, Jesse's girl, Rick Springfield. JP, I'm sending you a calendar, brother, because I remember that song. And I'm embarrassed to say I used to sing it in the mirror with my hairbrush as a young man in the early 80s. But Jesse's Girl was also released in 1981. And I will not make you listen to me sing that one. But we did sing some Hank Williams Jr. a little bit earlier in the show. So that might be worth tuning into Mr. Mortgage Radio for that. But guys, I know it's scary out there. There's a lot of headlines talking about real estate. This house of cards is going to be tumbling down. Focus on supply and demand. Look at the leading indicators. The leading indicator of a foreclosure is a delinquency. Delinquencies are down. Foreclosure numbers are up year over year, but don't forget we were coming out of the pandemic when banks were not allowed to foreclose. Landlords couldn't evict. So, of course, they're up, but they're up from regulated times where they weren't allowed to take place. And we talked about it. I don't know. It's been a couple months where, the average days in foreclosure were like, I don't remember, 900 days. So it was well before the COVID moratoriums when the foreclosures were even started. So, guys, it is scary out there, but it's not frightening. Just take a deep breath. Use the data. Hey, I just shared a Facebook post and I'll share it to the Mr. Mortgage page. It was from 1 year ago yesterday that I predicted rates were going nowhere but up from here. Was I Nostradamus? No. All I am is a guy who geeks out on the data every day so I can bring my clients and my listeners the best info. So, guys, that's what we're here for. We do it each week. If you want more of it, check out MrMortgageRadio.com, MrMortgageRadio.com, or call us during the week at 855-462-7292. But that music means we have wrapped up another week of the show. Thanks for joining us. Have an amazing week. We'll be here next week, same time, same station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.